Welcome back to another live stream. I'm going to beat this dead horse just one more stream, and that's corporate share buybacks. I've come to realize that I have two groups of followers with two opinions on this. So there's the one group, the market folks, and they basically summarize it as, well, it's depends on the individual firm. And the other group is more, progressive. And they're worried about society as a whole and equality. And they're saying share buybacks basically takes away from CapEx spending. And I've covered this, over a 2-week period and blog posts. I've got a blog post on my Patreon. You can find it right now on this specific topic. I did a tweet on X. Already done a whole video live stream on this last Friday. So I've really beaten this horse down. And there's some things on why it's important to me. And I think maybe the more important story. So I go through different threads of topics. So I'll pick a topic and I'll run with it for a couple weeks. I'll pick another topic and I'll run with it maybe at the same time or a slight overlap for a couple weeks. And really the story comes down to, why am I picking the topic, right? That's the real story in all this. What matters to me? And obviously my followers it's important too, right? I like hearing those opinions, but ultimately the story always comes down to what's going up here in my noodle, right? Got to figure this out first before I can give relevant information, and that's always important. So stay tuned and find out next.
You are now relearning economics.
Okay, so going to do another reaction video. I got one from the Wall Street Journal. It's short. It covers the topic of share buybacks. So am I going to react to this one and critique it? Maybe. Or maybe I'm going to agree with some of it. But I think it provides another person's perspective on what I've been trying to say for 2 weeks. And we just kind of want to settle this because I want to move on. I've got other topics. You can notice, I do the whole investment savings thing, et cetera, right? So I go through topics and sometimes things hit and sometimes things don't. In this case, this one might not be hitting because it's an obvious for the market people. This is a normal operation for corporate businesses, just like it would be a normal operation for me to buy out a partner when I no longer need it. That cash injection happened in the beginning. So I could buy, and we're talking from a partner perspective, a small firm, and I buy my capital expenditures, or I expend on capital. I buy my product, capital good. It makes me more money, hire some more people, make more profits. I don't need the silent partner anymore unless he's investing more. And so you can equate that to shares, right? So there's an initial offering, public offering of shares. People buy in. That raises capital for the company. They invest in their big factories. They hire more people, make more profits. And now they just got these shares, right? They don't need them anymore, right? And they're paying dividends on them. So what's the point of doing that? Might as well just cut the share level base, right? Now the existing owners that are left, their value goes up. Same thing. If I was just a small firm, now I've got more controlling share. I bought out my partner. So it's a natural thing, and I tend to agree with it. However, we have to acknowledge, is this a systemic risk to the economy in general? And does it cause inequality? So we'll check out this video, run through it, and see what's going on here.
2019, companies on the S&P 500 spent an estimated $189 billion buying back their own shares from the stock market. It was the highest in 3 quarters, but not the highest on record. In the final quarter of 2018, the number was about $223 billion, a high point on a decade-long trend. In all, since 2010, companies on the S&P have poured more than $5.3 trillion into repurchasing their own shares. Analysts say buybacks have been a driving force in the decade-long bull market. But there's some argument over whether they're good for the economy. Skeptics say the money used on stock buybacks would be better spent.
I like to say, instead of buying back stocks, they're paying down a pseudo liability, even though it's not a liability on their books in aggregate, and even just for a large company, right? It is essentially a liability for them. They have to pay out a dividend, right? They're a liability to their shareholders, right? If the corporation is an identity itself, then the shareholders of that corporation are not really the identity of that corporation. Really, the corporation has a profit motive. Bottom line, right? It's alive to make profits, and the shareholders want to extract some of that profit because they gave a cash injection from buying shares, initial public offerings. Of course, they're traded in the secondary market. So I'd like to say they're just shedding some of their liabilities, even though they call it equities.
Elsewhere, like building new factories or exploring new opportunities altogether. Meanwhile, proponents say buybacks are putting money right where it belongs, with shareholders. To understand the debate, you have to understand how stock buybacks work.
I love this music. This is deep.
The debate around stock buybacks has to do with how companies use their cash. They have access to quite a bit of it right now. The tax cuts in 2017, relatively high earnings, and low interest rates have all added to corporate cash stockpiles. When a company is flush, it has options for what to do with its money. It can buy other companies, it can spend on research and development, it can buy new equipment, buildings, or technologies, or...
So this is a conversation. Should I do my thumbnail? Did my thumbnail. This is a conversation I've had with a lot of people as well. They're doing a lot of share buybacks right now. There are times, if you look at this from a temporal perspective, that there's just no investment opportunities that in aggregate or for a firm where they're finding it's going to be profitable to build another plant, et cetera, et cetera. And you got to remember, businesses are in the business of making profits. And the derivative of making, profits and having cash flows, you're making output and you're employing people, and that's a benefit to society. So often there is nothing to invest in, it could be that specific firm or that sector. And at that point, they've got cash flow coming in. They reward, the owners of the company, buy out some shares, and the other shareholders, their value goes up, obviously, because you're diminishing the pool, the supply of shares out there. And that's just kind of a reward of business, right? They've, invested, they made their profits, they made their, built their factories, made their output, employed people, and had profits left over. And that's just a natural evolution of things.
It can return money to shareholders. This can take the form of dividends or stock buybacks. In the past 10 years, the top 20 companies on the S&P 500 bought back about $1.3 trillion in shares, with Apple leading the way by far. In a stock buyback, a company purchases its own shares from shareholders, and it takes them off the market, leaving fewer shares outstanding. This changes the math on the remaining shares in a key way. It boosts a metric called earnings per share, or EPS. The most basic equation for EPS is the company's net income divided by the number of outstanding shares. So when this number shrinks, the EPS rises. So if a company has a net income of $1,000 and has 100 shares outstanding, its EPS is $10. But if it buys back 10 of those shares, the EPS rises to $11.11. Higher per-share earnings make stocks look good. An analyst at the S&P Dow Jones Indices said that a little more than 1 in 5 companies on the S&P 500 reduced share counts by at least 4% through buybacks in the most recent quarter, boosting earnings per share. Stock buybacks can be a good deal for remaining shareholders. They tend to benefit executives because rising stock prices make their stock options more valuable. This is one of the criticisms of stock buybacks. The people who decide what to do with the extra cash often stand to benefit. Skeptics say that money is better used on growing the company. Here's a chart that looks at the change in business investment since 2013. You can see it's gone -3.
So interesting. They're talking about what I was just mentioning there. And just sometimes, that's an environment where there's no investment opportunities for a firm. There's the whole macroeconomic business cycle going on. And I'm just looking at that chart. Let's make it bigger here, because I'm just curious. So 15, 16, and 19 points where everything was kind of down in the cycle. And so that just makes sense in that regard. And we'll carry on and see what she says here.
Critics of buybacks say the practice is partly to blame for the lagging business investment. In 2019, Democratic Senators Chuck Schumer and Bernie Sanders argued that buybacks restrain companies from investing in R&D, equipment, higher wages, paid medical leave, retirement benefits, and worker training. And Republican Senator Marco Rubio of Florida unveiled a proposal that would change how investors are taxed when companies buy back shares.
Remember on Friday, I showed that chart where I compared investment to GDP. So it's kind of a productive look at firms and investment. It's really doesn't really drop off that much. So if you're measuring against, the assets of a corporation, it looks like it's declining over time, but that's just like the composition of business going through time. But if you look at it in aggregate for the economy, there's not those big drops, and I think it's an over-exaggeration.
Analysts also say that another worrying sign is that buybacks have coincided with a rise in corporate debt levels. Some worry that companies are taking out debt to finance the stock
Thanks,
buybacks.
Frank.
Proponents of buybacks say there's no real link between share repurchases and tepid capital investment, and that companies could be deferring investment for other reasons. Maybe they're pessimistic about future demand and economic growth, and they don't see attractive investment opportunities for the company. This camp says that if a company sees no profitable use of their money, they should return it to shareholders, who then have the choice to invest it on more profitable ventures. Some also say the rise in buybacks is overstated. Companies regularly issue stock as part of compensation, and the rise in buyback has partly served to offset those new shares. As this debate continues, one thing is clear. Buybacks are now a big part of the landscape of American finance. There's no sign that that's...
So it wasn't really much of a reaction video. Kind of failed there. But it was an informational video. And so I put out a blog on my Patreon, beating this dead horse down. And I put a little causal loop diagram. And in the blog, essentially, I said that, the opponents of share buybacks tend to look at the red lines and not the entire system as a whole. So, one of the if you look in the kind of center, you'll see share buybacks. And of course, you see the red line going to capital expenditure. Ooh, that's a bad thing. Or you see a red line going to wages. Ooh, that's a bad thing. And on their own, they are, right? Share buybacks going to dividends, which might actually be a good thing. But if you follow those loops and complete them, you see a different story. So obviously you see a good one. So capital expenditure to profits back to capital expenditure, right? That's just a self-reinforcing feedback loop. But if you look at household cash balances, yeah, buybacks might be taking away from wages, but that's during a time that there is no capital expenditure to be spent on anyways. And so that'll lower cash balances in the immediate term. But the share buyback itself is injecting money into the other part of the household sector. It might be more wealthier people, but those cash balances go up. And it lowers, and then there's an offsetting feedback effect by dividends going down. But of course, with those dividends going down, that allows for more capital expenditure, maybe somewhere in the future, right? But you see those household cash balances go up, there's more consumption, then there's more profits, right? So it's a dynamic system. Everything's non-linear. And to say, and I guess this is my critique against the progressive side of things. And it might be harsh, but because they were my initial followers, and that's kind of where I got into is, economic inequality. I'm very critical of things that are not the truth. about inequality, where we're picking battles against things that really we shouldn't pick battles against. And one of them, share buybacks. It's just a normal part of a capitalist system, a free market capitalist system. And love it or hate it, that's the world we live in. I don't see another system coming along anytime soon that changes it. You might have different political systems, whether it's a republic, a parliament, a dictatorship, well, I wouldn't say communism, but a stronger form of mixed government. So you've got a lot of government intervention. Still, even with government intervention, the government's dealing in a free market, right? And now some folks will say the government then ends up setting the market because they're so big and powerful and large. But there's many examples where the government gets involved and they don't move the needle, right? Because there's so many moving parts to the free market and individuals making their choices. So all I'm saying is share buybacks is a healthy, progression in the business cycle, right? It's a completion for a corporation on a project, right? It's the end game, right? But it also setting the table for the next, round of investment, right? It's just there's a temporal lag, right? So you expect, well, share buybacks, that means there's the correlation is placed here where I don't think a correlation should be placed, right? There's no causation other than it's a dynamic system. A company has reached maturity. It has created output because it built factories, it has employed people, and it's made profits. It's got large cash flows. And so it's paying off its shareholders. At the same time, in that cycle, there is nothing else to invest in at that point in time. So they just start paying off, their equity base. And at the same time, they could be paying off debt, right? Now, I've looked at some data, and there is definitely an inverse relationship between debt and equity. So if you're lowering your equity, you could be raising your debt, right? You have different compositions of liability. And I know we put shares in equity, but it really on an accounting term, if you really want to kind of look at it, it's just a liability of a corporation. It's like getting a loan, that initial public offering, right? It's a cash injection. So you see that inverse relationship, but ultimately I'd see it like we are in an advanced state. Dear Point Macro, who was on the show Friday, really was kind of illustrating that we're in an advanced, modern capitalistic economy, and we've kind of went through the, technology age since 2000, right? So we've had all these advantages, and they're all paying off now, right? And obviously firms fail over time, right? And other ones succeed. One goes out, one comes in that has a better, more innovative idea about a product. But ultimately, we kind of reach that plateau, and we're seeing more and more buybacks, right? Especially in the tech sector, but it can happen in banking too, the financial sector. And that's not to say that there is not a potential and there hasn't been manipulation, right? But that's kind of part of a capitalist free market system. People are aggressively pursuing profits, right? And sometimes ethics aren't involved in that, right? So I'm not saying there's not a point where the government shouldn't step in and regulate it. So during COVID, I don't know if it was in the US or Canada. I think it was the US. They restricted share buybacks by the financial sector and banks, right? So there's not to say that there can't be manipulation in the game, but that's prevalent in all parts of a free market capitalist society. That's part of the way we live. We can have an advanced system, but I think we're still at our base case human nature, right? It's a dog eat dog world. So that's why we have regulations. We hope efficient government regulations where we try to protect the vulnerable, but it's not always successful. I don't want this to be a long stream today. I've got work to do. I just wanted to kind of finish. I just kind of wanted to finish off, that aspect of things and share buybacks, because I think I made my point, and I think it was more about me in my experience with share buybacks and people's opinions on it, because I've got a diverse followership, especially on X, formerly known as Twitter, where I've got a lot of market people that follow me, and I've got a lot of progressive people that follow me, and their ideals definitely clash, and I see that, and I care about equity and whatnot, equality, right? So that's important to me. But I also, if we're just attacking something, that's actually not going to change inequality. I find it, I want to speak up. So it's more about me than it is about the opinion sometimes. So that's why I've kind of pushed this over the last few weeks. But I'll tell you, it's been my least engaging topic that I've ever done on social media. I thought it would be like a banger. Thought I hit a hit, like when a music, because I'm an economist. I'm an economist, an empirical economist. I build models, but I'm also like an economic commentator, content creator, right? So I'm always kind of looking for a hit for my Patreon, but yeah, not this one. Hasn't been a hit. It's been an absolute failure. Either you believe share buybacks are truly evil and capitalists have got their strings and are doing this to the economy, or you're a market person. You're like, well, that's just a normal operation, right? There's no middle ground there, right? And even I'm settled on the market side of things. It's just a normal operation of things, right? And that definitely doesn't bode well for, a progressive idea to, push the cause forward and fight inequality. It definitely doesn't satisfy that. And for my market followers, they're like, you're telling me something I already know. So live and learn, pick your battles. This is a battle. It's a dead horse. This is it. I got one pre-recorded video on this, and that's it. No more. Not doing this anymore. I got other shit I got to deal with, right? Anyways, hit that subscribe button, comment, like, help me out on my channel. This one's going to be a low view. It's just been a dead horse the whole time, right? I don't know why I keep pushing this. So I know it's going to just be a dead video. Nobody gives a shit about this one. So that's about it. That's all I got. We'll see you Friday. I think Steve Keynes back. Do a stream with him.